Good afternoon traders and welcome to this live Axia stream. We're going to be reviewing a technical break that occurred in the Bund yesterday on 15th of May. And we're also going to be looking at a comment that occurred that afternoon. So primarily going to be looking at our elite traders execution, but also towards the end just going to have a little look at how I executed over the comment, as there are some similarities and also different markets that you could have executed in. But quite a lot to get through. The first trade is about an hour of footage, so I'm going to have to play a lot of it fast forward. So I just want to crack on and get stuck into the kind of technical landscape that we were looking at. So starting with a profile in the Bund coming in yesterday, we could see we'd formed the initial balance ranging between, I think that's 56s and 69s. And the prior day we'd held at quite a key level towards the highs. So we'd formed a high at 72s, but there was also a distant swing high on the daily which come in at 75s, which I think occurred in this contract, as you can see on the top right hand chart there. So it was quite a key level in play to make new highs for this year or even the past few years, I'm not too sure. But you can also see that that coincided with, on the bottom right hand side, we have the yield chart for the Bund, so the German 10-year, and you can see there was the kind of the low, prior low in the yield, which coming at about minus 0.1, which, you know, is a key level. You never know if you're going to get stops. If the market can kind of really break through, it does have the opportunity to kind of create some momentum and have an extended move, which it inevitably did. But really what I want to pay attention to when we flick onto the recording in a second is just how the trader managed this trade, because he wasn't onside for a lot of it, but we've seen him execute like this a number of times where, you know, he keeps trying to build a big position so that when the market finally does release, he's positioned well to get paid and he has his good size on. But that also means that in the initial stage when he's getting the size on, he has to be quite dynamic and flexible with his sizing, and never really wants to see himself more than kind of 2 or 3 ticks offside. But technically, when we see this break up through the IB break, the main thing that we want to see is the market hold above the initial balance. So if we just pay attention to 69s, you can kind of see that he stays quite calm and relaxed with his size on, so long as we're trading up, you know, in this area. And also going to pay attention to something that we see on the ladder quite often is when we do have a break which is showing some, you know, distinct initiative, we'll often leave a low volume node at the volume at price on the volume at price chart. It kind of indicates that, you know, it's kind of vacuumed through a level, and as long as that low volume node holds, you know, it's a good reason to keep your size on. So really this is just a case of seeing how he, you know, manipulates his size to stay with the trade until he finally inevitably does get the payoff, because it was a slower move than what we often see, and especially around these big levels, you know, you would obviously like to see a big stop out and a big flush forward and some kind of aggressive buying and momentum build up. However, at these low yield levels or negative yield levels, what we've seen in the Bund for the past few days is any time we're making new highs, it's kind of 1 or 2 tick extensions, pulls back into range, and really it's one of those ones where you kind of have to just set your stop, you know, arbitrarily against, you know, 5-minute low or a 1-minute EMA or a 5-minute EMA, something that you can kind of attach your stop and trail your stop to, because otherwise the price action can often look a little bit weak as soon as it breaks the high and then comes back into range. So it's kind of, you know, understanding why you're in the trade, know that you're seeing the volume that you want, and know how the Bund's been trading at the extremes for the past week or so, and that it doesn't necessarily mean you're wrong until it really breaks back into range and holds. So quickly getting over to the ladders, and just want to draw your attention to the main market that we're looking at for here is the Bund. And as you recall, the IB high was at 69s. We've also got the overnight high, which come in at 71s, but really we're looking at 69s and then a break through that through 75. So as long as the market can hold above this sort of area after making that initial break, you'll see that he's quite committed to the trade. So I might speed this up. I'm going to play this forward. This is literally on the 8 o'clock cash open. This is where we're trading, so it's like 7:59 and 58 seconds or something now. So we're going to see the injection of volume just as the cash market opens. So you can see the market's opened, initially gone bid, and then flicked up 2-3 prices from 68s to 71s. So it's left a low volume node here, 68, 69, 70, which is exactly what you want to see. Now, he'd initially started selling this market. Not too sure what his thinking was, but obviously would have been playing for the failed inside daybreak, potentially on the cash open, a flick to the upside and then come back inside, as we have seen on occasion. But really what I want you to pay attention to is, as he's gone on offside quite quickly, but then 73s starts to reload, he cuts and reverses his position and gives up on the short and goes with the trend. He's seeing what he wants to see. These 3 prices, 68s to 70s, have held. So really it's given all the indications of what we want to see for a momentum breakout. It's taken the 75s, and now really he just wants to see it hold above 75. So you can see him working his position. He's got quite big size on here, 270 lots or so, but just working himself out a little bit as the offer kind of steps down and starts to reload a little bit at 76s. But in all, he is long, average price at the high. He's keeping quite a bit on here, but he's got some pretty good levels to kind of protect him to the downside, to tell him when he is really wrong. So say every time the market's ticking down, the bid just kind of steps up, and as it does and goes to make a new high, he's trying to get more size on there. It's only partially filled on an 80 lot at 77s. But looking for this now to just build some momentum and extend higher as the kind of cash market continues to open up. People are seeing this technical play. If you hadn't even been already now, you could be looking to get filled passively on any pullbacks down to the sort of 73s area. However, as you're failing to do that, people are starting to come to market and pushing market higher. So 300 lots, applying his usual execution style of laying offers of smaller clips, to get hit on as the market rotates higher. But every time the market kind of shows a little bit more, a little bit more commitment, a little bit more volume at the highs, he's willing to get into some more. And something else that I just want to draw your attention to, which I hadn't mentioned before, BTPs and the BTSs on the right-hand side. Now, when the cash market opened and the Bunds bid up, that coincided with the real sell-off in the BTPs just at that moment. And you can see BTSs are stuck to the low. So all of a sudden he's seeing that the Bund BTP spread's potentially in play. It's just another kind of indicator to hinge his trade in the Bund to. And we will see him getting short in the BTPs shortly after it's pulled back, as he feels there's another leg lower, and also entering in the BTSs. So I don't recall any specific news that was in play, but we have seen a little bit of peripheral risk off with regards to Italy, with Salvini making a few kind of outlandish comments with regards to their budget deficit targets, etc. So we're yet to see the market rotate more than kind of 5 ticks from the high in the Bunds. So he's kind of staying quite patient with this trade. He's not panicking out of it when it goes offside. Yes, he's increasing his offer to 20 lots at 78s as opposed to 10s all the way up, aside from that. But, that's just something that's quite habitual for him. Take a little bit of size off, give yourself a head start if it does start to offer over. He's now gone to 80 lots offered at 77. So always prudent that as soon as he goes, you know, 1 or 2 ticks offside from his average price, or sees the market rotate lower from the high than it has done in the preceding rotations, you know, he's always prudent to take up for a bit of size. But as the market shows more signs of strength, as it starts to push back towards the high, again, he's trying to get in with first 80 lots and then chased higher another 80 lots. So he's always trying to bump up his size as, you know, the market confirms his idea still is in play, and equally as he sees a bit of an indication that, you know, maybe it is slowing down or it isn't in play, he's willing to lighten up. And really that's the main thing that we want to take from this. You know, at this moment he hasn't really made anything, and this is quite key for this trade. You know, you have to be stubborn with your idea, and you know, when you're building this sort of size that close to the highs, you know, it's inevitable that you're kind of going to bounce around a little bit around scratching your P&L. But what you're looking for is that kind of 10 to 15 tick, you know, extension where you can really make the majority of your money for this move. And it's kind of just staying with it until the market does release, because inevitably it does. It waits until people get tired, people get impatient, people who have bought the high, it might have one last wash back and then it will go. And that's what this trader really kind of does very well, is, you know, he doesn't worry too much about shifting his average price higher as he's kind of taking a bit off and then adding a bit on, because he's looking for that flow, that one flow, which, as we've hinged it to the BTPs and the BTSs already, if we see the BTPs now make another low through these 69s, you know, I don't recall this move, I wasn't actually on this move, but I wouldn't be surprised if at that moment he's looking to add in some more into his Bund position, as we see the BTPs move low and down now, and that's when the final, or the kind of best flow of this move comes into play. So you can see BTPs 5 ticks from the low, trading 75, 76s. BTS is still stuck to the low. So as long as the BTS, which is the Italian 2-year, apologies I haven't mentioned, you know, these two should be doing the same thing. You know, the 2-year and the 10-year, you know, if it's showing this kind of peripheral risk off, they should both be towards the lows. But when you see he's worked a position where his average price is within sort of 5 ticks or so from market, this is where he's really in his comfort zone, because he works the rotation so nicely that as the market pulls back, you know, he never allows himself to get out of shape from this point. He's kind of done the hard work in this 73 to 78s area, and now for him it's just applying like a methodology which is so well honed in. You know, he's got good average price position, he's got good size on, he's done all the hard work, and now it's just about letting the market move and staying on until the move's finished. You can see BTPs are now within 5 ticks of the low. He's entered 30 lots short. You know, it's giving him conviction as the BTSs are going offered and selling off through the lows, making new lows again. It's giving him conviction that there is more room in the BTPs to move lower, and that also plays in really nicely with his Bund position as that Bund BTP spread widens. The BTP is quite slow in the way it's trading. You see he's not looking to work anything out yet. He would normally have resting bids all the way down, but really he's expecting it to make a new low. So unless he starts to go offside in the BTPs, he's not going to look to work himself out of that position. Bund's now pretty much straight lined around 15 ticks from the cash open, and extended 10 ticks through that 75s level, that key daily high that I mentioned before. And he just doesn't have to do anything too complicated now in his Bund position. As soon as the offer reloads and he restacks his the offer with a 10 lot or a 20 lot, and as it's already gone, say 15 to 20 ticks, what we see sometimes now when he's got quite a lot of size on, is looking for a flush through the high. He actually lays 20 lots, so he kind of loads up the offer a little bit more through the high of the day, looking for that extension as the BTPs get through the low. So far so good, everything's kind of looking about right. So I'm actually going to speed this up now, because we've got quite a bit to get through today. So I'll play this at 4 times the speed, which is quite fast, but you'll get the idea. BTP's still hovering around the lows, Bund rotating between these kind of 83s to 86s area, but as long as it's making new highs, there's no reason not to stay with the trade. As the BTPs make a new low, he's added into that trade up to 45 lots, which is quite big in the BTP really, and now selling more as it looks to extend lower, and we see all of the markets kind of starting to show a bit more of this risk-off theme. Up to 100 lots short now in the BTPs, which is it's a very significant size really for that market. And now he's applying his usual execution strategies. If you recall, the prior low was 69s, which he was looking for the BTPs to trade through. So now he started laying bids, looking to get worked out, and hasn't committed any more size to the Bund. However, generally, as long as he's seeing the flows that he wants, by the time he gets to around 100 lots, as we see it there, he added in another 80 lots just to maintain that size above 100 lots as the market's rotating higher. So because he hasn't really got paid off in the BTPs as of yet, but with that amount of size on, all he really needs is one good flush to the downside, and then to aggressively start scaling out of his clip, as we're starting to see now. Trades down from 68 to 60s. And it's just a case of staying with the trade for as long as possible. Working himself back into the Bund as the BTPs extend lower. Adding another 80 lots, or looking to add another 80 lots into the Bund. But being quite dynamic with his size, all the time trying to take something off when the Bund makes a new high. It's not a case of just getting in with your size and holding it to an arbitrary target. This trader, he holds until the flows stop, until all of the correlated markets look like they have a final flush through the extreme and make a new high or a new low, and then he'll start to work out quite aggressively out of his position. So even the BTPs starting to add a little bit more in, just to maintain his size around the 50 lots level. And as the Bund approaches this 1,000 lot on the highs at 95s, kind of stagnates a little bit. And now it's just a case of just working himself out the remainder of his position. He's up 45k on the day. As we've said before, generally these moves, these flows, they finish with a bit of a pop. Now there's a bit of an indication in the Bund that this may have happened. We see the 1,000 lot on the offer, which reloaded a few times, or at least restacked up to 1,000 lots as the people were hitting it. And now it's kind of pulled back 6 ticks or so from the high, and the BTPs have bounced back up towards these 69s area, which was the kind of prior break level. So he hasn't put anything more in his BTPs. He's added a little bit more into the Bund, because sometimes you'll notice as it has that first pullback from the high, he's looking for the retest or the taking out of that 95s. But really, the majority of the move on this break is kind of done now. But we haven't seen this for a while, where the Bund and the BTP have really been working well together, but it started to come back into play in the last couple of weeks. We saw it towards the middle of last year when the Italian elections were on. If you look back throughout the library of streams that we have on the website, there's lots of examples of these Bund BTP trades. And even for myself, I'm going to start going back and rewatching some of them just to remind myself that, how these works. There's little kind of things that you can pick up, but more than anything, as the BTP goes to make a new low and aggressively breaks through, it's often a very good time to get quite aggressive in the Bund and hitting at market. Even if you're scaling out of something immediately, there should be a new high made in the Bund, after that instance, if the BTPs can maintain their low. And now pretty much he's just looking to see the BTPs hold below that kind of 68, 69s level. Starting to wind down his size in the Bund a little bit now. He's gone from scaling out with 10 lots to 6 lots and allowed his position to come below 100 lots, which he hadn't up to now done. And now it's just a case of managing himself out the remainder of his position. So I'm going to pause that there, but really key things to take away from that are just how, firstly, the reaction that we saw through the IB high and then through that key level at 75s left a real good low volume pocket for about 3 ticks or so. Generally, if you see it even for 1 tick, a low volume node on these breaks, it's very healthy for the momentum move. But the wider that low volume area is, if it goes from 3 ticks to potentially 5 ticks, that's showing some real initiative and failure of the offer to kind of come back and trade out those prices. So really good things to be aware of if you're looking for a breakout. But really the hard work was done in that area. He kind of trusted the reaction that he saw there, trusted the technical setup, knew we're at new highs in the futures and new lows in the yield, and that there's a potential for this to really open up. And the hard work really being done, I think it was this kind of 75s to 79s area, where it's just keeping his cool, being dynamic with his size, but looking to maintain, a big enough position that when it did release, he had enough on that he could apply his usual execution strategy without depleting his size too much. And that's kind of something that I'm quite bad at. In that period, when you start to go offside a couple of times, sometimes it's too comfortable for you to lighten up your position, and then when it does finally go, you're scaling out too quickly, effectively with what you're placing on the offer, as you're not carrying enough size. So you kind of have to commit to the move in that area and know that, right, you've got some kind of key technical levels to the downside that you shouldn't see the market come back trading through. So, you're not going to blow your account by taking this trade and getting quite aggressive. At worst you'll take a loser, but you'll know where you're wrong and you know where the market shouldn't trade. And that's really all we're looking for, is those kind of high risk reward areas where you can have a very tight stop within, 3 to 5 ticks is usually quite healthy to see where you're definitely wrong, especially in the Bund. You do get occasions where it's 1 or 2 ticks, but sometimes you kind of got to give it a little bit more space and stay with the trade until you get paid off. Okay, I'm now going to fast forward through to later on that day, and the US-China trade tariffs had been mainly been in play for the kind of few days leading up to this. Last Thursday, we all did an overnight session where we were waiting for the outcome of the meeting between the Chinese delegates who'd gone over to Washington. And that theme had kind of already changed from having a really good move on the preceding Sunday night on the open, to, the market had already started to go into a phase where it's not that comfortable trading these comments, and that inevitably is shown by we have these big whips, these big shanks. But what we hadn't heard anything really about, we'd heard some news over the past couple of days, but nothing too firm, was about the European and Japanese auto tariffs. Now, this comment come out, we can see at the bottom here, it's not the actual comment which we saw, but it was to the effect of Trump plans to delay imposing tariffs on auto imports. Now, it didn't mention anything specific to the EU, but as we'll see with our elite traders execution and then going on to my execution, it's positive news. You expect there to be a risk on reaction to this. It's quite definitive in that a lot of the comments that we've seen have been very wishy-washy and not really anything too firm. So it was quite nice for once to have one which, if you saw the initial reaction which you'd expect, which would be equities pushing higher and bonds pushing lower, then there should be some sort of sustained move. Now what we can see looking at our elite traders ladders is he's already short and actually offside 80 lots in the Bund. Not a huge position for him, but not particularly comfortable. And his starting P&L is around 37k, and he's also long in the SPOOs as well. So he was already positioned correctly for this trade. However, after talking to him, if you hear anything regarding European auto tariffs, generally the first market that you're going to want to hit is the DAX, which is shown up here. It's the most responsive, best market to be trading. Admittedly, he said that he wasn't too switched on. He didn't hear the word European tariffs. So his kind of set routine on these risk on, risk off comments are SPOO. If the SPOO goes on side, he hits very aggressively in the bonds. And then if the bonds go on side, he goes back and adds more to the SPOO. For him, this is kind of routine. And this is something that is a real key takeaway from today is, building out these, these methodical, habitual sequence of executing on these trades. It's how you can really get the size on very quickly. You pretty much just go into autopilot. And that's something I'm trying to build up with the way I execute, but without having done it for so long, it's not habitual yet, but it's something that when you're thinking about what themes are in play, it's really important to know in your head which markets you want to hit, because you only have a split second. You'll see in the DAX how quickly it goes, to get in that market. And if you're not getting in quickly, you're generally going to be hitting potentially up to half a point beyond the start of the move. So what I want you to pay attention to is how he hits first in the SPOOs, then in the Bunds. He does hit in the DAX, but doesn't get a particularly good price. And he also hits copper as well. But what we'll see when I go through how this move reacted later on when I have a look at the charts, the best markets to hit would have been the DAX and then to some extent the Bunds or the SPOO, but really the DAX was the key market for this. It ended up going 2 points, which for me is the biggest move that I've seen in the DAX. But I'm going to play this forward for you in real time because it is quite quick. And we'll see how fast he gets up to size. So you can see very quickly the SPOO's sprung up. He's added to 136 lots and then added his Bund position up to 240 lots. Also long 41 lots in copper, and now into the DAX. But the DAX is only getting in at double O's, which I think is about 60 ticks or so through from where it started. But working himself out, mainly in the equity markets. The DAX, he got up to 40 lots. That's a really big position for such a volatile market. But mainly focusing on working himself out of the markets which have gone the furthest. It's only now he's starting to pay attention to the Bund position. He's already up 80k or so on the move, but still looking to get some more. He hasn't really gone offside. I think he's added a little bit more into his DAX position. And now it's just a matter of he's got everything on in good areas. It's just a matter of working himself out. You can see he's starting to work himself out of this Bund position a bit of stagnation around this kind of 04s to 08s area, which I want to draw your attention to when we look at my performance, where I was kind of getting out too aggressively in that area. But you can see very quickly he's fortunately been in those markets already as the comment occurred, but he's been so quick to get in with another clip in SPOO, another clip in SPOO. So he got 2 more clips in SPOOs, and then big clips in the Bund, and then he went copper, and then DAX. But you see he's up now more than 200k on the day, so he's already made, 160k or so on this move, and now he's actually started shorting the DAX as he feels it's overextended and working himself out of his Bund position. Copper he's not really done too much with, he's just left it there, but admittedly, it didn't go that far, but he didn't lose anything on it either. So he's out of most of his SPU position, he's got about 20% of that left on. DAX he's cut and reverse, but the market's still gone further than he'd expected, so he's kind of looking to scratch that position as the DAX kind of pulls back. But there's actually a subsequent leg which we'll see, I think around now in the DAX. Now, so DAX has started pulling back, and this is something that was quite individual to this trade. It went so far and it actually pulled back over a point from the highs. And what a lot of people did, and it's the right trade to be doing, is to start fading that pullback. And that's something I'm going to talk about a little bit more when we compare the 1 minute charts of how the market trades towards the end of the stream. You can see copper is still just letting it run. SPU's pretty much worked himself out of that position now. Bunds, it has pulled back quite a bit, and you'll see him start to work himself into a little bit more as start to find a little bit of resistance around this kind of 0708s area. However, the bonds having been a bit funny on how these kind of risk on risk off trades have gone, where they've not really been as responsive as we'd like them to be. The equities have been much better. But what we can see now is the DAX starts to pull back more. And as he feels the pullback of the DAX is overextended to the downside, he starts building a long position. However, it actually goes a lot further than he was hoping for it to go, and essentially ends up working himself out, averaging himself out a little bit out of that position. But it was the right trade to do. If you see the market that goes the furthest pullback, that's the one that you want to be re-entering in for that second leg. You want to be getting in the market which has responded most favourably or most appropriately to the specific news that you've heard. So he's up around 200k. He's still kind of short in his Bund position, but working himself out. He's out of his DAX position. And what I want to just go to now, I'm going to skip forward to where he starts working himself back in to his DAX position. So I just want to focus mainly on this top left-hand ladder here. And you can see it's pulled back, I think, over a point to around this 40 level. But as soon as he's in, he starts to go offside, and it actually blips down more. Now, after speaking to the trader, what he likes to do is, obviously you want to be in and you want to see the market bounce quite quickly. But if he does see another splash to the downside, he uses that as an opportunity to buy some more. But the way that it worked out in the end is, because it went so much further down than he expected, by the time you're buying more, you're pretty much just looking, in not necessarily the best result, but your kind of your expectations of the trade change as the market gets even more extended to the downside. So you can see he's up to 12 lots now, gone offside sort of 20 ticks or so, and the market just keeps moving down. It's now down, I think, maybe 30 or 40 ticks from where he first started to work his long position. It's up to 20 lots. This is one of those times when, by the time it's gone that far, is this a situation where if you've got this completely wrong, is it going to retrace the entirety of the move? If it does, speaking to this trader, the mindset that he's in is, right, this trade's gone very well. I don't want to get caught up too much in the follow-up trades. And, that's generally how we all operate. If you're very successful and you're up 200k on the day, in the first phase of the move, you don't want to be throwing that away, sticking to your guns and getting overly stubborn in a very kind of volatile, thin market by committing to, a follow-up move. Especially when there's various news sources at this time also trying to downplay this news a little bit, saying it was already known, etc., which always happens, but it does kind of play into your mind, so that when he does finally go on side, he actually works himself out of his position in the DAX and doesn't kind of get any more in or commit to the kind of the attempt to make a second high as he would have done if he'd gone on side quicker. So just want to draw that to your attention, where it doesn't always go right. Obviously we see this trader being very successful, but even though he didn't hit the best market first, he still had an amazing trade out of it, because he went into that autopilot, risk on, SPU, bonds, DAX, copper, and then it's just a case of everything's on. In the time that it's taken for him to get all of his size on, the market's already extended and moved, so he's then in a position that it's just a case of working himself out, applying his usual execution strategy. So it's one of those trades where it looks like there's a lot going on, and to the untrained eye, very haphazard, but it's very methodical how he's kind of organised his trading and gone about this. And unfortunately, the DAX did carry on moving. It bounced from that first pullback, another point back up towards the highs, but you can't have it all, and really it's just an example of you can be fortunate to one extent that you're already positioned in the right direction for when these moves happen, but you're also you're looking to really build on that and take advantage of that good fortune and kind of get as much size on as you can. So just after looking at that, just to tie this now a little bit into my execution, which I'm not going to dwell too much on, because obviously we all like seeing the massive size being thrown around, but this is just an example of how even with limited markets, you don't need to have everything. You don't need to have copper, you don't even need to necessarily have the DAX. Just want to draw your attention to a simpler way that you could execute from a junior trader's perspective while still maintaining a kind of similar execution style. And that's what we're trying to do here. We're not just looking at our elite traders' execution just to kind of be like, oh my God, that's so amazing. It's to try to pull things that we can tie into our own trading, even with much smaller size, and use that to kind of build up how we execute in these trades. So again, it's going to be queued up, same sort of time. My main market here is the Bund and also the DAX here. So DAX isn't a market I'm very familiar with, don't normally hit it. But my reactions in this case, for me were pretty good. I did get a very good price, but the fact that I got such a good price meant that really I had the opportunity to be even more aggressive in some other markets, such as the stocks, if I'd like to, or even the Bund. Having got burned a few times, getting overly aggressive in the bonds versus the equities on some of the US-China stuff, it was playing in my mind a little bit, to the extent that I didn't really get as much size away, and my first clip wasn't really big enough in the Bunds, which we're going to see now. So the market's trading 30s in the DAX. See, the DAX blips up. I'm in with 5 lots in the DAX, and then straight over, and only another 5 lots in the Bund. And then as my DAX position goes on side, I think I work myself out of 2 or 3 lots, and then add another 10 into the Bunds, and trying to apply the similar kind of execution strategy, working myself out, laying offers in the DAX and laying bids in the Bunds, trying to get rotated out. But the key difference, which I want to draw your attention to, is fair enough, our elite trader's average price was much better in the Bunds, around 20s, but he didn't even start touching his Bund position until, I'm out. So in the time that I've worked myself out of my Bund position and my DAX position, he's pretty much just got himself in with as much size as possible in everything. And now, as the Bunds start to come lower in this kind of 07 to 02s area, is where he really starts addressing the Bunds and working himself out of there. So that's the key kind of difference, in that I had the opportunity, hitting such a good price in the DAX. I think I hit within about 20 or 30 prices of the start of the move. I think 20 prices I hit. I had the opportunity to hit stocks as well, and really my first clip in the Bunds should have been bigger. Now, I've been looking at this a lot, and when you're determining the size that you want to use in each of the markets, they kind of have to be appropriate relative to each other in that, you know, these are DAX minis, by the way, so they're not, it's not the full DAX, so it's kind of half, more than half of the tick value of the DAX. But what I've been kind of guilty of recently is overweighting in the secondary markets versus the first market that I'm hitting. And that was kind of the issue here, because I only had 5 DAX limits at the time, because I didn't have that much to get on. You know, I was very wary of oversizing in the Bund and taking a big winner in the DAX and taking a big loser in the Bunds, which is what I've done with the SPUs and the bonds over this US-China stuff a lot. But really, the fact that this comment was so clear-cut and definitive, and the DAX went so far, I mean, at one point, I didn't really know where it was trading. I was just thinking of working myself out of the position because it had blipped so far. So obviously a great problem to have. But when you see that mega aggressive price action and everything moving, and these sustained moves, i.e., you know, they're maintaining and making new highs or lows in all markets, you know, it's a good reason to kind of stay with the trade. So I'm just going to kind of summarize now. With a couple of points, and just want to have a quick look at the best markets to hit. So we can see just the general positioning of the bonds meant that it was a good trade to kind of hold a bit more size and get a bit more aggressive in. This is the Bund 5 minute that we've been trading up all day. So, you know, you could argue that there was a bit of long positioning built into there. You'd expect there to be a bit more of a release. But just looking at how far each of the moves went, you can see the DAX started at 1930s and went to 2130s. So a full 2 points in the DAX, but looking at how our elite trader executed on the pullback, I think he started getting long around this area, which is the right trade to take, but you wouldn't really expect that it would pull back another half a point. So, you know, it's one of those ones where it's the right market to be trading the bounce of the first pullback in, because it's the one that went the furthest. The other market that went really far, which he didn't execute in, I didn't execute in either, but the euro had been stuck to the lows, but had been failing to break a daily low for the preceding sort of hour or two. And really that was a great market to hit. That went 112.16, so it went about 30 or 40 fat ticks. But again, the ones that went furthest had the cleanest kind of pullback and bounce. Really looking at the SPUs, they weren't that clean. You can see in this first minute candle, you know, it had quite a steep pullback before it carried on going. I think it even went against you to start with. You know, stocks was very good along with the DAX. And the Bunds, when it did pull back, it kind of just took so long. These were all 1 minute charts. To roll over, and when it didn't make a new low, and then it came back up. So our elite trader said that he actually got, you know, caught out a little bit in the Bunds in the aftermath, thinking that, you know, there would be a bit more of a sustained offer. But really, this is just something I'm starting to do now a little bit more. The key markets look at, right, auto tariffs. I know the order I want to go now is DAX, Euro, Bunds, you know. That's for me. Or if it was a China comment, you know, starting to think, right, I want to go SPU, Bunds. You know, I don't have copper limits, but, you know, as soon as you can start building up this kind of idea in your head, you'll be surprised how quickly you can react and do it in the moment when you hear exactly what you want to hear or see what you want to see on the headlines. So just tying that all up now, really some of the key takeaways. Habitual market order when hitting comments to get better prices, and really it's just kind of building up that instinctive reaction with how you can execute when you hear these. And something that our trader, you know, it was just kind of second nature to him that he'd go clip in the SPU, big in the bonds, back to the SPU and add some more. And he doesn't even have to think about that. If he's seeing the markets light up and go crazy, he doesn't really need to know what's happening other than the sustained volume across the board. It was so clear cut, the comment, that it was never going to be bad. It might have been bad for US equities if you'd really thought about it, but in reality, you just want to go with the risk on, the simplest kind of execution for the theme that you've heard. The second point, for that second phase trade, fading the pullback, that first pullback which we see across the board, you want to prioritise the markets which have had the biggest and best moves on that first initial flush on the comment. In this case would have been DAX and Euro. And then for me, for my execution, if I'm hitting multiple markets, it doesn't really make sense to scaling in the way that I did, to the extent that I hit a good clip for me in the DAX, but then hitting 5 lots in the Bund and then adding another 10, in hindsight, it just makes no sense. If you're going to be hitting multiple markets on a comment, it's because you've got conviction in it. You're not going to be tentatively getting in 2 or 3 markets. It doesn't make any sense. So if you hit in your first market and you go on side, then really your first clip in your secondary market, it may as well be a big one. You may as well either commit or don't commit. Don't try and find somewhere in between, which doesn't really make sense, because that kind of cost me a little bit in the bonds. I could have really made at least double in the Bunds, even by reordering the way that I distributed my clips, i.e. getting with a 10 lot, then a 5 lot. It would have allowed me to manage myself out at much preferable prices. So I know that was quite a lot there, but a really interesting day yesterday. There's been some quite fruitful days over the past couple of weeks or not, but really it's just a case of being really patient and waiting for the clear-cut ones, because for every theme that develops, it generally goes into a sort of mode where after you've had a couple of good moves off these trades, they kind of, the effect of them gets nullified a little bit, and the market starts to shank, the algos start to kick in, and the moves aren't as clean. So really it's a case of waiting for those real clean-cut, distinct comments and hitting them very hard and knowing in advance which markets that you want to hit. So I'll leave you with that, and I'll speak to you soon. Cheers.